Record. Okay, so this is, what's the date today? It's March 15th, and we are going to do a tax call. And I don't know what kind of disclaimer I should be doing because I mentioned this, there's no income disclaimer like a tax disclaimer, but all I can say is I'm no tax professional, but please talk to your tax professional before taking any advice that I say. So that being said, I've been audited 6 times in a row probably. And for those, are there any Americans on here right now? No, I don't see any hands up. So we're all Canadian. For the most part, it can go both ways, but this is based on Canadian tax law as well. And how do I put this without, if you get audited, all an audit means in Canada is, can you just prove what you said is right? That's all an audit technically is, okay, well, you didn't send us your receipts. Whenever I've been audited, and when we've done, Angel and I went through fertility, and we're talking $150,000 worth of medical expenses. Anytime you hit over a certain amount for write-offs, a red flag goes up, and they instantly know it's a computer that basically says, okay, for these portion of your bills, we need to see receipt. You send it in, 9 times out of 10, it basically goes through, or they'll say, no, actually, according to tax law, you can or can't do this. So you're not going to get thrown in jail unless you're willingly lying or intentionally trying to cheat the government. Nothing's ever happened with us. For the most part, 99% of the time, everything goes through. That being said, contact your tax person to make sure that everything is looking good. I'm just going to go through and mute all of you with kids. Okay, good. We're done. So that being said, as far as taxes go, and a lot of you have never had a side business before, you basically, for example, are a teacher, you can use TurboTax and fill in every little line based on your T4, and that's all you do. The cool thing about having a side business or a home-based business is it counts against or for your personal income. So for an example, if you're a brand new coach, and let's say your day job, and I just use round numbers because it's easy, let's say your day job makes $100,000. If you're a brand new Beachbody coach, yet you're spending money doing advertising, going to events, paying your coach fees, you're on Facebook, you bought a brand new phone, you bought a new computer for this, and you're actually spent $5,000 or let's say $10,000 in business expenses, yet your day job, they taxed you on $100,000, you overpaid taxes on $10,000. So because you made $100,000 on your day job as a teacher and they taxed you on $100,000, yet Beachbody, you lost $10,000 as a coach, your actual net income for the year was $90,000. So they overtaxed you by $10,000 on your teaching job because it becomes combined. So if you're at, and this is rough math, if you're at a 40% tax bracket, you overpaid your taxes by $4,000 that you should get back from the government. The government now owes you $4,000, okay? That's how that works. So you don't need to technically show a profit in any business, really. After X amount of years, they might just, say you need to start showing a profit. And that's what I think a lot of bars do, and they change the name after, 5 years because they sort of play that game. I'm not saying to play game. It needs to be legitimate. Apparently boxed water is better. But that's how the tax system works, if that makes sense. That's the easiest way I can explain that. And that's what your goal is. Yeah, the CRA likes to see a profit, but I've run businesses even when I was a teacher. I had BC Golf and Ski. I had EduTech Consulting. None of them ever made a profit. And I was audited and nothing happened, as long as they are legitimate expenses and you can back it up. You can't fake it. Go ahead, Tanya.
Yeah, I just wanted to say that if you're consistently showing a loss and you get targeted and you're showing a loss because you're claiming expenses that are completely unreasonable,
yes,
then you're going to get dinged for it. And they're going to keep coming back and not leaving you alone.
100%. Once you're flagged, and I know we're flagged because our expenses are usually huge. Any medical expense over $10,000, red light goes on. And I think the same probably goes for a business. Once you hit a certain threshold of write-offs, CRA automatically issues I forget what the audit is called, but sometimes they just ask for my travel expenses. Sometimes they just ask for my automobile expenses. Sometimes they ask for all of them. And so what we do, and what I recommend you do, is hire a good tax person or somebody who understands. It's pretty basic at the beginning, where you have all your receipts, you summarize them, and I'm going to show you the form. I think it's a T2125, where you actually fill it out and you can give that to your tax person as long as you have the actual receipts. Then if you do get audited, all you do is just stick them in an envelope, send them to them. They will look at them and go, yep, done. And your process goes through. So it is pretty straightforward. What I'm going to do is kind of show you really quickly. It gets a little complicated if you are income splitting with a spouse. But if you are doing that, that can help lower, if you have more write-offs than taxes, more write-offs than income, it can actually help lower your spouse's tax bracket as well. So I'll just show you really fast.
Didn't they take income splitting away?
I don't know. I'll find out this year. But it's very different too, because we have a rental property and we can split that as well as a loss. So we have to have someone a bit more than just your average TurboTax person. So here, just really fast, are the basic tax brackets of what Canadians pay for this year. So for example, if you're over $200,000, your tax bracket, you're paying 52% tax, all the way down to the basic amount. And this is your provincial, if you live in Ontario, combined with your federal. So there's two different levels. This is it combined. If you live in on the East Coast, I feel bad for you, because I think your provincial taxes are quite a bit higher. So the goal is, even if, and this is just really basic, if your income is $73,000, and I'm going to highlight it and hopefully you can see it. Can you see that highlighted, Rachel? So just for the most basic tax benefit that I can kind of explain is, let's say you make $73,200. You're going to be taxed at a 31.5% tax rate. Even if you have a $300 loss, right, in write-offs, more than your income, you're going to drop basically 2%. So even if you, and this is really silly, but even if you have if you're making $73,200 and you have a $200 write-off to drop you into a lower tax bracket, you're going to make 2% on 73. You're going to make about $1,400 in taxes back because you've dropped a complete bracket. That's super complicated. Hopefully some of you understand that, but don't worry if you don't, because the math gets a little complicated. But the goal is to take your Beachbody losses and apply it if you're not making a lot of money, against your personal income for your day job. Okay? So here are some ways to do that. And these are, and I'm going to make these bigger. So these are legit write-offs based on what I've been told, what I've seen other people do. Coach fees, your monthly coach fee is a legitimate tax write-off. Gifts for your coaches, costs for things like apps that you're going to use on your phone. Those are used for your business. It's a business expense. Software, even if you buy TurboTax or if you buy Photoshop, $400, whatever it is, that is a legitimate business expense because you're using it for your business. Facebook advertising, any ad you boost, or if you're running like ads, those are 100% business write-offs that go against any income you make. Apparel's a tough one, and we're going to get into that in a bit, but if you do team apparel, like any Crush It or Soul Fit stuff that we make and we wear or give to our coaches, that is one that I can legitimately justify to CRA or IRS. When you purchase an item such as a computer, you don't get to write off the entire amount. It's actually what's called a capital cost allowance. You are allowed to write off a percentage of it each year. So if you buy a Mac for $2,000, I think the first year is 30%. Don't quote me on that. But you can write up $600 for the first year and a subsequent amount each year. There's actually a chart that will explain that for you. Even if you Google capital cost allowance CRA, it'll pull up a chart and there's a code for each, whether it's a computer or an automobile, etc. But those are legit. If you go to Super Saturday and buy a ticket, it is a 100% business write-off. Your gas to get there. If you go out for dinner with your coaches when you're there. If you go to Summit, your airfare, your hotel, your entry fee, those are all legitimate tax write-offs that go against the income you make. Cell phone. Now, things like cell phone, you are going to have to calculate or let CRA know the percentage that you use your cell phone for business. So if you use your cell phone, hopefully as a Beachbody coach, it's probably going to be around 85%, I would imagine, if not more. For business, you are able to write off 80% of your cell phone bill to offset any income you make, okay? Meals for business. Now that's a tricky one, right? People often make a joke. If Angel and I go out for dinner with Rachel and JP, it's like, hey, Beachbody, yeah, okay, we talked about Beachbody, yeah, we can write this off, right? So you have to be careful with that. It should be legitimate. If it is, what we like to do is on the back of the receipt, write who was there, what you talked about, and, well, the date's on the receipt, but that is the proper way to do it. Dinners can be touchy. Alcohol and entertainment, things like that, you actually can only write off, if I remember right, 50% of the actual total. It's not the full amount. So if you went out for dinner and it was $100, you can only write off $50 of it as an entertainment expense, okay? But they do add up. It's great for Angel and I because we're business partners, and without a doubt, and this isn't a stretch, 90% of the time, if her and I are out for dinner, we're talking about work in some degree or another. It's sad, but it's true. Maybe this Friday we'll try not to. Let's see if we can actually do that. What else we have? Okay, office space percentage of home. That's another one. Oh, someone want to add in anything? Feel free to stop me as I go. Office space percentage. Now, this one can be tricky. However, what we do is, if I'll use a rough number. Our house isn't this big, but if our house was 2,000 square feet and our office was 200 square feet that we use for business, that's 5%. Is that right? Did I do the math right? 20% of, no, 10%. Thank you. 10% of our actual living space is our office used for work. Therefore, we can write off 10% of our internet bill, our hydro bill, our phone bill. I think this is right. And your interest on your mortgage. You can't actually, what I've been told by our tax person is you can't write off 10% of your actual mortgage. Talk to your tax person. Ours, and based on what CRA told us, they actually made us do a drawing, an actual attempted at-scale drawing where our office was, and they said it had to be 10% of your mortgage interest, not your actual mortgage. Okay, so double check that out. Most of this is on the CRA website or IRS if you're American. And then insurance. So vehicle works very similarly. With Beachbody, I would assume it's going to be like 5% max for most of you. We run online businesses. We don't technically use our vehicle a lot for work unless you're a live instructor or you're doing a lot of fit clubs. But if you are going to Super Saturdays or doing some driving, you can do the same thing. If you use your vehicle for 5% business, which I think seems fair, you can write off 5% of all your vehicle expenses, interest, maintenance, gas. However, they may ask to see a mileage log. So be prepared for that if you do that. So that's a tough one.
Mike, in Quebec, it's mandatory to have that log.
The log, yeah. Most places are going to ask for it. You're in Quebec?
I'm not in Quebec, no.
Oh, okay. You just happen to. Are you a tax person? Are you
I'm a CPA, yes.
Oh crap! You're like analyzing every damn thing. I knew I was, and I'm staring at you because you're the first person below me, and I'm like looking, waiting for like a nod of approval every time I say something. Damn.
It's all good.
So far, so good. Whew. Okay. I just sell dog food. Okay, so on the fence items, and these are things, Shakeology, you're going to hear half the people say yes, and you're going to hear half the people say absolutely not. Sometimes it depends on the tax person you have, probably if they don't know much. And sometimes it depends on how much you convince them that you need to be on Shakeology to be making an income. And that's the route some people try and take is, I need to be on HD to make cycle bonuses. And in order to be on HD, I have to be on Shakeology to be a coach. And I need to be on that because I need to be a product of the product in order to sell my item. So there's a whole circular argument that some people use. It's, I'm not going to say who uses it, but I know some top coaches use it. It's an iffy one, and that's one that I would really get legal advice on or CPA advice on, or because it is, it's a tough one. I find it hard to justify personally. Tanya?
So my first instinct on this one, if someone asked me, I would be like, no, but I'm really conservative.
Yes.
The risk is that if you do it, you have to have a really good justifiable reason to do it. The risk is if you do it, it's not a lot of money.
Right.
And if you get dinged on it, if you get audited and you get dinged on it, you just have to pay back, whatever tax you didn't pay because you claimed it as an expense plus interest and penalties.
Right.
So it's 7 years of claiming Shakeology, that could be a lot of money. And what I would do is if you really insisted on doing it and your accountant said, you know what, this is okay, I might only do a portion of it, not 100%, because you are consuming it for personal use.
Yes. It's a food. It's a grocery. I mean, that being said, some people, when they do a clean eating group and they go through a food prep and want to explain how to do it, I can see justifying once every, quarter or something, writing off groceries to explain a food prep and how it's done. Or if you have people over and you're going to do a small group or something like that, I can see justifying that occasionally, but not writing off your groceries.
Right. And the other thing too is, I give out a lot of samples of Shakeology. So if I'm buying a separate box of the little packets, I write that off because I'm not drinking that myself. I get my bag every month and I'm drinking that.
Yeah.
That I write off. However, if you don't get those and you're giving people samples out of your own bags, then, every once in a while you could probably claim a bag of Shakeology.
Yeah, that's a great idea that I would do, especially if you have two people in your household on Shakeology, I would have one come in as a bag and one come in as the sample packets because it says sample packets on it. That is far more justifiable to CRA than your monthly breakfast. So that's something to keep in mind. Apparel, non-team related. Some people say, well, I'm in the fitness industry and I do videos of myself and I need to be wearing apparel. That's one that you're probably going to get busted on if it's not branded.
Yeah, this one went to the Supreme Court. You're never going to win this argument unless you have your logo on the clothing.
Yes. Wow, Supreme Court. What am I doing on this call? Okay. So no, honestly, I'm kidding. I totally appreciate it, Tanya. This is, like I said, it's purely basic advice for people because they don't really know where to start. So HST. So here's an interesting one. Beachbody collects HST for you on each sale. Okay? Technically, that money needs to go back. Oh, I gotta be careful who's gonna see this because I can put this on YouTube. That money should be paid back to the Canadian government. If you make over $30,000 as a Beachbody coach in a year, Beachbody gives you that money back as a one-time payment or quarterly, depending on how you have it set up with them. And you then have to apply for your HST number and submit that money. I've got 10 minutes left. Okay, 9:55. You then have to submit that money back to the government in your HST, whether it's quarterly or yearly, how you have it set up. Just as a heads up, okay? So when you see all of a sudden a big chunk of money come into your account from Beachbody in February or January, that's not a bonus. That you'll get an email, but originally I thought it was a bonus and I was like, woohoo, I don't know where it came from. And then I got a letter saying, here's the money you have to give back to the Canadian government. So be aware of that. That's your HST, which you need to set up a business number with the Canadian government with, okay? So yeah, that's one other thing that gets a little complicated and everybody kind of freaks out. You think this is complicated. That's kind of it as far as basic taxes go. Any questions before we go on or we expand on some of these from anybody? I don't know if there's anything in the chat. Especially while we have Tanya on here. So
What's them? Because I don't have another job.
Yeah.
This is my job. So I collected all my receipts and I have about 9,000 or so in expenses, especially with Summit. What's the threshold of income where they actually start taxing you?
Go ahead, Tanya.
Well, Mike, you have it up. You're going to get taxed on all your income. Yeah, scroll up. So every year the percentages change, but I'm going to guess, I don't know them off by heart, but I think Mike probably took the most current percentages.
The basic exemption amount is, I think, $10,200. Over that, you get taxed. The base amount under 10,000, I think 150 or something it is.
Okay.
You don't get taxed on it.
The other thing is you're going to be paying CPP now on your tax return. So because you don't have an employer withholding it at source and remitting it to the government for you, that will be on your tax return, and you will have to net it against whatever, it'll get netted against whatever money you're owing or owed from CRA.
Okay.
And that's something you probably want to set up yourself. And I would do it quarterly, if not monthly, and pay that amount yourself as opposed to getting dinged with it.
Yeah.
Well, you know what? The max amount is so low. It's not. It's like $2,500 every year or something like that. It maxes out. There's only so much you have to pay every year. So just doing it on your tax return is probably the easiest thing to do, because the schedules and everything get filled out then.
Yeah, and I had, let me see if I can pull it up really fast. If anybody else has a question while I'm looking this up.
Can I ask, we don't have a home office. Like, I work at my dining room table.
Yeah.
Can I count that as my office and then call that the percentage? How does that work?
Yes, definitely.
Okay.
I didn't want to say yeah, but the Supreme Court said you could. So
Yeah. It's not 100% used for your office though, so that's where you have a little bit of a risk. So you do have a space in your home that you use for work. It gets a little more complicated. So you just want to be careful that you're not claiming too high of a percentage of your home.
we used our dining room last year, Melinda, and I think it came out to like 12.5% or something like that.
Yeah, okay. So be conservative at a number, but I'm glad I can still count it. I was thinking I couldn't if I didn't have an actual office.
So here's your T2125. This is the basic thing that you should probably go through before you take anything to your accountant. And it's basically, it kind of explains everything from business expenses, what you can write off. It's got it line by line here. And here, for example, your motor vehicle expenses, not including CCA, means like if you had bought your vehicle for $20,000, you can't do a $20,000 write-off. I'm pretty sure it's 30%, but these are all things that you can look at when you pay your accountant now to do your taxes. That is a legitimate tax write-off. So if you're spending $400 this year to have your taxes done, that is a $400 expense on your business. Okay, so it's funny, but it all adds up, and you'll be surprised at how much, even if you don't make a lot of money as a coach, odds are if you're really doing the business properly and going to events and you're posting and using your phone and your data plan gets up there, you should have a significant amount of write-offs at the end of the year that you should be getting, a significant amount back on your taxes legally and legitimately.
Yeah, and I want to say to everybody that if you are like really going big with this, it is worthwhile to get an app like QuickBooks Online and then use another app like Receipt Bank to keep track of everything, because Receipt Bank, you take a picture of your receipt, it goes into Receipt Bank, and you can post it right into QuickBooks. You don't even have to think, and then you have an image of that receipt in 2 places, which will never go away. You'll always have it. And the apps are not that expensive to pay for every month. I think a subscription to QuickBooks, like basic, is, I want to say $19 a month. And Receipt Bank, I think it's $25 for the first 50 pieces of paper that you put in there.
Yeah, 100% agree with that. You should never need to go incorporated until you make a certain amount of money, where the whole reason you go incorporated is to take income at to pay yourself and then be taxed at a corporate tax rate, which is I think like 19% as a 16.
Yeah.
So don't even worry about that in case that was going to be a question. But most of you on here should be able to come up with, a certain amount of write-offs. And it's funny, people always say, oh, I went out for dinner, it was a write-off. Well, you still have to pay for it. You just get, whatever tax bracket. Let's say you spent $100 on a dinner. you don't get that $100 back. You get whatever percentage of tax bracket you're in back. So if you're paying 30% tax based on that chart I showed you, you will get $30 of that back. Okay, so it's like you're getting a discounted dinner. Or when you go to Summit, if you spend $3,000 on the trip, you'll get $1,000 of that back. But you know, it still adds up as a significant amount. Any other questions? I know I went through that quickly, but I just wanted to kind of go through the basics so that people sort of had an understanding of even where to start. Definitely download that file, the T2125, as a worksheet for yourself to keep track of things to take to your accountant, because then it'll also show them that you kind of understand what you're doing, so they're not going to start saying, no, you can't use that. No, you can't use that. Fair enough. What did I miss, Tanya?
You covered it all. You'll be surprised at how much your home office can get you back in tax credits. Just be really careful that you're not too greedy with it. And then keep a log of your kilometers. That's really important. And I think that's it. One thing I want to make sure of, and not many accounts would do this, but don't depreciate any portion of your home with your home office, because you could really pay for that later when you sell your home. You don't want to pay any capital gains or anything on your personal residence. So don't start doing silly things like that. But I can't see an accountant doing something like that, but you never know.
All good, people? Cool. Yeah, I'll post this. I'll save it. I'll put it on YouTube, and then I'll put it on the Crush It site as well, so you guys can ask questions below, and we'll keep kind of a running tax commentary below there. And if you have any questions, post it below, and then we can continue from there. All right. Cool. Have a good night. I'm going back to my really funky hotel room in Kingsville, Ontario. How cool is that? Hey, it's like New York in the ghetto, or in the country. Anyhow, have a good night, everybody.